I'm absolutely delighted with the circumstance that I see in front of me. I have an absolute belief that there is an overwhelming probability that over 2 years or 3 years, the gold market and hence the silver market and hence the gold and silver equities markets aren't merely higher than they are today, but rather are much higher today. And the fact that the markets are giving me a sale, that goods that I want to buy are on sale, that goods that I want to buy are markedly cheaper than they were 3 months ago, is lovely. It's truly a benefit. First of all, if you are committed to an asset class the way I'm committed to gold stocks, if you have some stocks you'd like to buy and you've worked on them hard enough that you understand their values, you're delighted to see them fall in price. There are 6 or 7 gold stocks on my buy list that I already own. But because I don't want to sell them for any price, even double what they're selling for now, I don't care if they go up a little bit, and I'm delighted if they go down because I'd like to buy more. Remember that if you like an asset, the fact that it's cheaper is a good thing, not a bad thing. People who feel trauma about declining gold prices or gold stock prices are people who don't actually believe in the asset and might not want to be in the space at all. Second thing is, you'll recall in our last interview, I said to you that from my point of view, at least, the junior gold stock market was way, way, way ahead of itself. It collapsed in its own weight. The buyers were narrative driven, not mathematically driven. And the sector itself did so many private placements, so many issuances, that they smothered demand with a flow of new issues. But more importantly, with regards to gold itself, while gold trades around many different factors, the most important are interest rates, real and nominal interest rates. The period of the increase in gold price from the third quarter of 2019 until 3 months ago coincided with a decline in the interest yield on the US 10-year Treasury from 200 basis points to 60 basis points. Coincided very nicely. The plateauing of the gold price and its subsequent decline coincided with the increase in the interest rate on the US 10-year Treasury from 60 basis points to 150 basis points. I would suggest to you, Jake, that for most people, the most important determinant, near-term determinant of the gold price is the US 10-year Treasury interest yield. Looking forward, I think that this gold bull market is very much intact. The Barron's Gold Mining Index that I refer to so frequently on your show is a wonderful tool to understand that. In terms of duration and dimension, gold bull markets are very frequently 10-year affairs, not 2-year affairs or 3 years affairs. And by way of dimension, the gold equity, the gold price, as an example, in the last gold bull market, 2000 to 2011, went from $253 an ounce to $1,900 an ounce. When people say to me, Rick, the gold price has moved from 1,100 to 1,700, is it over? I have to say, if you're a student of history, it's hardly likely that it's over. During those 10-year bull markets, during a cyclical bull market, cyclical declines in the index of 25 or 30% are commonplace. Cyclical declines of 10% occur with the frequency with which you and I inhale and exhale. People who don't realize that are people who aren't going to make money. If you believe in the arithmetic around gold, if you believe that quantitative easing, debt and deficits, and artificially low interest rates are going to depreciate the value of your savings, then you believe in gold. And if you believe in gold, you will be easily able to withstand the volatility that we see in a secular bull market. And you will come to regard 25% declines in the equity indexes as opportunities to fill in your portfolios with stocks that you wanted to own that were too expensive when you discovered them. I'm absolutely delighted with the circumstance that I see in front of me. I have an absolute belief that there is an overwhelming probability that over 2 years or 3 years, the gold market and hence the silver market and hence the gold and silver equities markets aren't merely higher than they are today, but rather are much higher today. And the fact that the markets are giving me a sale that goods that I want to buy are on sale, that goods that I want to buy are markedly cheaper than they were 3 months ago, it's lovely. It's truly a benefit.
Okay, so then I think it was quite a while ago when you told me you were like at 40% cash. You thought things were too expensive in all different things you were investing in. And then when we talked more recently, you had started to, it was down from the 40%. Where is it now?
It's above 30%. What happened is the last time that you and I were talking, the oil stocks and the uranium stocks were just too cheap. And so I allocated to both sectors, thinking that it would take me 2 years to be right. And I was right in 2 months. When a market gives you more than you deserve in too short a period of time, you owe it to yourself and your fortune to do some selling. And so I've been a reasonably aggressive seller of the oil stocks and the uranium stocks, not because I don't believe in them over the 2 year time frame, but when you have a basket of tiny uranium stocks that are up 200 or 300% in the short term, and the uranium price hasn't moved, what you understand is that you got more than you deserved in a quicker period of time. And you haven't actually gotten it unless you've taken it. You know, if your portfolio goes from 200,000 to 500,000 and you forget to sell, you aren't $300,000 richer. You're just $300,000 more exposed. So in the context of what happened to me in the last quarter, the market gave me too much too quick. And I'm old enough that I took it.
And when you're seeing, I guess real quickly, since you said that, on this, before I go back to gold and the economy, what is your thoughts on a lot of uranium stocks correcting? Are you rebuying, or do you think there's more ways to fall?
Listen, do I think there's more room for the juniors to fall? Absolutely. Remember that most of the juniors don't have much uranium. So if the price of something that you don't have goes up, it shouldn't matter to you particularly. The high quality junior uranium stocks got ahead of themselves too, in the sense that they won't be able to put their projects in production for a couple of years, and on a time value of money circumstance, they're ahead of themselves. But I believe that the market clearing price for uranium will be at 60 or $65 a pound. And I believe too that the market, at least the spot market, will overshoot. But when that happens, I don't think it's an if, I think it's a when. When that happens, the equities will reprice not merely higher, but way higher. But I don't think that that's going to occur in the near term. And the fact that the market was up uniformly 200 or 300% means that I think the next direction in the juniors in particular is lower, not higher. We talked too about a circumstance where the uranium equity prices rose and all of the junior uranium companies would need to come to market to raise additional equity.
Yeah.
And they're crowding into the market. There was a recent financing by Denison where they went out to raise $30 million. And as I understand it, the book got to $250 million before the underwriter said, stop. They were more than 8 times oversubscribed in an offering that was open for 48 hours. This isn't speculation, this is mania. Now, this is, from my point of view, a very attractive company. The price was reasonably attractive. It's very well run. It's backed by the Lundins, all kinds of good things. But in a sector that's supposed to be unpopular, an offering that's open for 48 hours and is 8 times oversubscribed, tell you that there's more money in the sector in the near term than the sector can handle.